bring in some quick analysis from our economist in studio, Reinielle Erece of Oikonimia Advisory and Research, Inc. Good seeing you again, Matt. Welcome to the program. Okay, so 1.7%, you were bang in line. That's what you had in the Business World Poll.
Yes.
What do you make of the result?
It's quite expected because of two reasons from both the demand side and the supply side. From the supply side, we saw some changes with regards to the rice importation ban, with regards to typhoons affecting agricultural output, and with regards to demand, we can see that it's on the ascending trend because we are going towards the Christmas season. So both of those factors combined will definitely be the reason behind the rising inflation.
Let's take a look at that ascending trend. If we could just bring back the chart, because it was pretty interesting. From July, we came all the way from 0.9. And then we've hit that sort of an ascending trend to 1.5%, 1.7, and a bit of a stopover right now.
Yeah.
We're at 1.7. Inflation's still rising, but at that same pace as September. We're hitting already the holiday season, that quarter when really the spending rush happens.
I think last month's big jump from 1.5% and then to 1.7%, those are primarily driven by lower agricultural output and lower, supply chains being affected by typhoons and natural calamities. So those are the primary factors behind the big jump. But we can see that inflation is still a bit stable. The driving factors behind inflation is still benign, I would say. It wouldn't be a major concern with regards to Bangko Sentral bringing much more intervention or doing much extreme moves in combating inflation, because the movement of inflation from the start of the year until now is still within the BSP's targets. So I don't think that a lot of factors are becoming concerning. It's more about a factor of natural calamities, seasonality, and of course the holiday season.
Well, let's tease that out and the variables and constants that we're facing, because typhoons are a big variable. And back in October, we've seen Typhoon Paulo. So that's a big one that impacted the eastern side of the Philippines, eastern Luzon. And that was also compounded by the rains that we've seen with Ramil as well as Fengshen. So presumably there could have been an increase in prices in food, but it didn't happen. How come?
I think it's also because during that time, rice importation is still a big thing. We can still import a lot of rice, and rice is a big part of household spending. Therefore, we can see, even if we go deeper into the inflation details, we can see that inflation for the bottom 30% of households is still on a negative trend. It's because food importation is still good, but we can see that the president decided to bring back tariffs, decided to limit imports again, because on the supply side, it's now affecting farmers' incomes. So now that we've solved at least a bit of the security problem on the demand side, it's now time to help the farmers. So now it's a bit of a balance between allowing rice prices to increase a bit, but at the same time, it's not too much that households cannot afford it anymore.
Well, it was pretty contested when that came through, the rice import ban.
Yes.
There were sectors that didn't want it, but now you're saying that it's working out?
Yes, because it's a balancing act really. Because on the demand side, of course, bringing in more rice supply will definitely bring rice prices down. And we saw that during the last part of last year until the first half of this year. But now during the second half, we can see that the government have decided to shift their strategy, and now it's time to help the farmers, because the rice imports lowers their income, because of the influx of supply, there will be more competition. It's hard to compete in terms of price, because foreign countries such as Vietnam, Thailand are much more productive when it comes to rice production. So now they decided to shift, and rice prices are now starting to increase a little bit.
And the government's decided to extend the ban on rice imports all the way through the end of the year.
Yes.
Is that going to be good or bad for inflation?
For inflation, it will definitely cause it to increase a bit, and add to that the Christmas season. So we can see a bit of inflation going up to around, let's say, 2%. But I don't think that it warrants extreme moves from the government or from the Bangko Sentral ng Pilipinas, because it's still within their target of 2 to 4%.
Electricity costs, that's one of the components of inflation. The higher power costs always mentioned as one of the reasons why inflation's gone up or is going up. I did have a moment to speak with Meralco's Ferdy Geluz. He's the Chief Revenue Officer, and here's what he had to say about the cost of power. Let's both listen in.
Well, the purchase power cost is basically generation, generation plus transmission. As far as distribution charges is concerned, it's actually the same, no, flat since 2016. So for the last 10 years or so, distribution charges remain the same. But of course, generation costs or purchase power costs varies, of course, with the peso-dollar exchange rate, the foreign exchange rate, as well as the cost of fuel and the fuel mix. So right now, I think we're heavily reliant on natural gas, LNG. And of course, there's fluctuation, and of course, it's dependent on the foreign exchange. But I think it's our energy mix is actually contracted in a way that, aside from cost is a consideration, because we are actually mandated to procure the least cost manner. But of course, the number one priority is really energy security, to ensure that there will be power once the customers turning their switches on. So we're actually working with DOE and ERC in terms of our power supply contracts, and we ensure that we get the proper approvals before we actually contract them. And of course, it's based on the forecast as well as the power development plan of the government.
So it's reliability for one, but for the customer, it's affordability. You mentioned the forex,
Yep.
which is much of a variable for the purchasing of fuel. Now that the peso's fallen to a low we hadn't seen this year, what might it mean for the average retail rate for the customer?
Well, I think that, the general tendency of forex, increases, so technically there will be an impact on the fuel rates as well as electricity rates, because we actually procure generation from the market, from market, of course, through contracts, and contracts is usually based on the cost of fuel. So there's a tendency to really some sort of increase. No, of course, we manage it by balancing also our purchase in the market. If the open market or WSM prices are low, we some sort of also buy from the market in a quantity that we can, because of course we have to honor our existing contract.
That was Ferdy Geluz of Meralco. I'm still with Matt Erece of Oikonimia. So many ways to slice and dice that one, and a big explainer on why the cost of power might go up. What do you make of what Ferdy said?
The big factor behind the increases in generation would be fuel costs. It's because with regards to international fuel markets, it's starting to recover now. We can see that oil prices from both Dubai, WTI, and other oil indices, they were a bit lower during the middle of the year. But now it's starting to recover now that Trump's tariffs have become much more clearer. And of course, with domestic factors, we can see that the peso to dollar exchange rate is starting to falter, and we're starting to reach 59 levels. And both of those factors combined will result in much more expensive generation charges.
Well, just taking a look at the peso, I was looking at the open and how it's reacted post-inflation. It's actually weaker, 58.65 to the dollar, coming all the way from 58.515. But when I took a look at the PSEI, it's open higher, 0.4%.
Yes.
Quite far away from where we're at about 72 hours ago, when it fell to below 57 or below 58. What do you make of the reaction in the markets?
With regards to the PSEI, stable inflation is definitely a positive market catalyst. It shows that government moves are working. It shows that inflation is still in the positive, in the green. Therefore, there's still spending activity, but it's not enough to warrant extreme moves or to be concerning. But with regards to the exchange rate, we can see that the slight recovery this week, it's more of a um, transitory action from the markets, but on a longer term, it's still affected by major fundamental news, such as the corruption scandal, such as international market activities or situation. Those are much more bigger factors. So compared to last month, I think that's the better time frame to analyze the exchange rate. It's still elevated, and that definitely affects import costs. Therefore, it affects rising inflation.
But when you layer up the OFW remittances, that usually comes in
Yes.
a big surge as the Christmas season comes. A lot of the relatives, families, and friends remitting money from
Yes.
overseas. Could that temper any further falls in the peso?
Yes, I don't think that we should be concerned with the exchange rate reaching 60 pesos per dollar. I think 59 is already the ceiling. And now that the exchange rate has reached 59 and we can see a slight recovery because of both OFW remittances, and we can expect the Bangko Sentral ng Pilipinas to do some moves such as through the market, selling of dollars, reserves.
Do you think they did that when the peso nearly hit 60?
It's hard to tell. We can see that maybe in next month's report of the reserves, but we can definitely see that we have enough power to stop it from reaching 60, at least for the short term.
But yeah, we can't keep doing that because we only have so much
Yes.
dollar reserves to go with. You did make a mention of the Bangko Central's monetary policy action with today's 1.7% on inflation. How do you think they'll decide in December, given all the other factors like probably a weaker peso
Yes.
and possibly a weaker PSEI?
The priority of the Bangko Sentral ng Pilipinas is always price stability and then economic growth. Then later on would be on capital markets, on exchange rates. So with regards to price stability, I think it's a good news that it's still 1.7%. It's still below their floor of 2% target. With regards to the PSEI and the overall economic growth, it is still below expectations. It is still underwhelming. Therefore, I don't think that the Bangko Sentral ng Pilipinas will deviate from their monetary policy easing path. They will continue cutting rates. Probably during their December meeting, they will cut another 25 basis points because, again, price stability, good, but economic growth, it's underwhelming.
Exactly. So
Yes.
could they cut by 50?
50 would be a bit extreme because holiday spending would make inflation reach maybe 2% or even higher. And a 50 basis point would be a big catalyst that would maybe exaggerate inflation numbers and other factors. So I don't think 50 might be a bit too much, but maybe the frequency of cutting may change and may be much more frequent now.
Final question. GDP is coming out on Friday.
Yes.
What are you expecting?
It's a bit underwhelming. I expect it to be at 5.3%, mainly because of two factors. Lower government spending because of higher scrutiny from the corruption scandal. And as a result, investments will also go down because foreign investors would pull out, would be hesitant in investing in the country because of those news articles that's coming out.
Could that be an understatement? Because I've just spoken with two analysts yesterday, 24 hours ago, and the ASEAN economist of Nomura said it could go as low as 4.3 for the third quarter because of the corruption scandal.
Well, that isn't impossible, but I think it's a bit too low. I expect it to be around, I guess the floor would be around 4.9, 5%, and then the ceiling would be around 5.6. But overall, I think the general consensus among all economists is that the corruption scandal is definitely bad for economic growth.
All right, well, we'll leave it at that. Thank you so much for your insights.
you.
Erece of Oikonimia Advisory Research, Inc.